If you are a homeowner over 65, there are at least 5 separate legal forms sitting in your county office right now that can lower your property tax, freeze it where it is, or in some cases, wipe out a big chunk of it completely. Not loopholes, not schemes. These are exemptions and credits written into state law, and most seniors never claim the ones they qualify for. Today, I'm going to walk you through all of them, plus 3 bonus moves that almost nobody uses, and the last one might be worth more than the other 7 combined. I am not an attorney, and I am not selling you anything. What I did was go through the assessor rules and the state revenue websites across dozens of states because the numbers changed a lot for 2025 and 2026, and I wanted to give you the current figures, not the ones from 5 years ago. Now, before you click away, let me guess what you are thinking. Maybe you think this is only for low-income people. It is not. Some of these breaks have income limits, but several of the biggest ones only care about your age and the fact that you live in the home. Texas, Florida, Georgia, and Tennessee all have programs where your income does not matter at all. Maybe you think this is only for wealthy people with fancy accountants. Also wrong. These are designed for regular retirees, and you file most of them yourself with a 1-page form. Maybe your house is paid off, so you figure the tax does not matter much. Friend, the property tax never goes away. You can burn the mortgage and still lose the house to unpaid taxes. A paid-off home is exactly the situation these programs were built for. And maybe you rent, so you think none of this applies. Stay with me anyway, because a few states like Missouri, Michigan, and Massachusetts actually send renters a check too, and you probably have a parent or a neighbor who needs to hear this. Here's the part that makes people angry. Your county assessor is funded by the very taxes they collect. Their budget depends on that revenue, so no one from that office is ever going to call you, mail you a reminder, or knock on your door to say, "Hey, you turned 65. You qualify to pay less now." That is not how it works. The exemption exists, but it is on you to ask for it by name. And this is the single most important idea in this whole video. Being legally exempt and actually not paying are 2 completely different things. Almost none of this is automatic. If you do not file the form, you keep paying full price even though the law says you do not have to. So let us go through the forms. Number 1 is the basic homestead exemption. This is the foundation. If the home is your primary residence, most states knock a fixed amount off the value they tax you on. In Florida, that is up to about $50,000 off your assessed value, and there is a rule called Save Our Homes that caps how fast your assessment can rise. In Texas, voters approved Proposition 13 in November 2025, which raised the school portion of the homestead exemption to $140,000, up from $100,000. The one rule to remember: in most places, you have to file by a spring deadline, often around April 30th, and in Florida, it is March 1st. Call your county, ask for the residence homestead exemption form, and file it once. Number 2 is the extra senior exemption that stacks on top. Once you hit 65, many states give you a second chunk. In Texas, thanks to Proposition 11, which also passed in November 2025, seniors now get an additional $60,000 off the school value on top of the homestead, which brings the combined total to $200,000, and for a lot of homes, that erases the school tax bill entirely. In Florida, counties can add up to another $50,000 for seniors, though that one has an income limit, about $38,686 for 2026. Georgia is interesting because many counties fully exempt seniors from the school portion of the tax, which is usually the biggest slice. Who does this help most? Everybody over 65, but especially people in areas where school taxes dominate the bill. Ask for the over 65 or senior homestead exemption by name. Number 3 is the freeze, and this one is quietly powerful. Instead of lowering the number, it locks it. In Texas, the moment you qualify at 65, your school taxes hit a ceiling and cannot go up, even as your home value climbs. Illinois has a senior assessment freeze for people with household income under $65,000 right now, rising to $75,000 for the next assessment year. Tennessee lets qualifying counties freeze your bill if your income is under the county limit, which runs about $63,470 in the bigger counties for 2025. The freeze is worth the most to people who bought long ago in a neighborhood that is now booming because it stops the tax from chasing the market up. Many freezes require you to reapply every year, so mark your calendar. Number 4 is the circuit breaker credit, and this is the one that helps renters and lower-income owners the most. The idea is simple. When your property tax eats up too big a share of your income, the state hands part of it back through your state tax return. Massachusetts pays qualifying seniors up to $2,820 for the 2025 tax year if your income is under $75,000 as a single filer. Michigan gives up to $1,900. Missouri gives up to $1,100 to owners and $750 to renters. Minnesota, Maine, New York, and others run versions too. The catch is you have to file a state income tax return and attach the right schedule, even if you normally would not file at all. A lot of seniors leave this money on the table every single year simply because no one told them to file. Number 5 is for veterans, and it is huge. If you have a 100% service-connected disability rating, states like Texas, Florida, and Virginia exempt your entire homestead from property tax. Not a discount, zero. If your rating is lower, say 10 to 90%, most states give you a proportional break. And here's the part families miss. In Texas and Florida, a surviving spouse who does not remarry can keep that full exemption. If your late husband or wife was a disabled veteran, you may be sitting on a total exemption and not know it. Bring your VA award letter to the county and ask. Now the 3 bonus moves. Bonus move 1 is deferral. If cash flow is your real problem, several states, including Oregon, California, and Texas, let seniors postpone the tax entirely. Oregon actually pays your county for you and puts a lien on the home at 6% simple interest. Texas lets anyone over 65 defer with interest at just 5%. Understand clearly, this is not free money. It is a loan against the house that gets repaid when you sell or pass on, and it reduces what your heirs inherit. If you have a mortgage, check with your lender first, because some require taxes paid through escrow. But for a house-rich, cash-poor retiree, it can mean staying in your home instead of selling under pressure. Bonus move 2 is the surviving spouse carryover. When a spouse passes, exemptions do not always transfer on their own. Many states let a widow or widower keep the senior exemption, the freeze, or the veteran exemption, but you often have to reapply and prove you still qualify. Miss the reapplication window, and you can lose a benefit you were entitled to keep. If you have recently lost a spouse, this is a phone call worth making now. And bonus move 3 is the one I told you might be worth more than everything else, and almost nobody does it. It is protesting your assessment. Here is the stunning part. The National Taxpayers Union Foundation estimates that 30 to 60% of homes are overassessed, meaning the county thinks your home is worth more than it really is and taxes you on that inflated number. Yet fewer than 5% of homeowners ever challenge it. And of the people who do appeal, research from the Lincoln Institute of Land Policy finds that 40 to 60% win a reduction, often 8 to 20% off the value. You usually have a short window, often 30 to 60 days after your assessment notice arrives. In Texas, for example, it is May 15th, or 30 days after your notice, whichever is later. You file a protest, bring a few comparable sales, and a lower value carries forward for years. This is not exempt status. This is correcting a number that was wrong in the first place. Let me put real dollars on this. The average American single-family property tax bill in 2025 was $4,427, according to Adams' annual analysis. And in the highest tax state, New Jersey, The average tops $10,000. Now picture two neighbors on the same street in nearly identical homes. One filed her senior exemption and her freeze and appealed a bad assessment. The other assumed it was automatic and never asked. Over a 20-year retirement, that gap can easily add up to $50,000 to $100,000. Same house, same street, completely different bill. The only difference was one of them filed the forms. If this helped you, do me a favor and share it with someone over 65 who is still paying full price. And if you want more plain English breakdowns like this one, subscribe and stick with the channel. Your future self and your bank account will thank you.